So what I do when I write with the investors in mind. But the one thing I keep on coming across is that there's a big mismatch with investment products and tools in the space industry because a VC that's used to doing software launches and funding and financing or stepping into hardware, that's two different games. That's two different ball games. The timelines can be different depending on what they're building. And sometimes, and once the VC's timeline is over with and they have to close out that contract, what bag are you left with if you're an entrepreneur? So, I think that's what's the interesting thing to me is how is capital going to adjust and evolve to accommodate and help the industry mature.
Yep. Yeah, and it's a bit of a flywheel at some point. So I've also been talking to folks in the insurance and credit market side of the industry, and right now it's very hard for them to figure out how to lend against an asset. I mean, you lend against a satellite. What's that satellite worth if the guy that you're lending the money to goes bankrupt and you reinvest it? Mm-hmm. What are you going to do with it? How are you going to monetize that investment? So there's a lot that has to go into creating that repeatability and that the mechanisms that allow them to finance that. But if they do, credit is a lot cheaper source of money than equity.
Yeah,
so, they can and entrepreneurs can start to do more. And so it's getting those flywheels going and making that standardization, making this much more of a repeatable process that can really be lent against or otherwise drive the growth of the economy.
We plan on having a guy for insurance in a week or two for space insurance. That's exclusively what that company does. Come on the show, which I'm excited to see. I've actually wrote about just a hypothetical financial bond or infrastructure bond for the space industry. As a way for these companies to raise some money. Because to help our viewers understand what the problem is that if you're building infrastructure, you're usually not going to get capital revenue coming in until after you built the infrastructure and starting getting your first people. It's like a toll road. You don't get money till the first car goes through the toll booth, and you have to have it completed by then. So these companies are coming along and investing like a VC does. They're expecting revenues at a certain time. That doesn't happen until the very end. So it's the reason why I say it's a mismatch. It's a mismatch of what the VC is expecting. That's the reason why you see between round C and D a drop off between companies that are trying to develop their technology to that point where they're ready to scale. There's only a few companies that are actually scaling.
Right. And part of that's they're not delivering the value for the government contractors in some cases, or they're not finding the dual use consumer markets that they may have projected. And that's again part of the thinking we want to bring to the table is how do you start to identify those much more reliably and ideally sooner to really drive that growth.
And I think part of the problem for that to develop, we have to really lock down mass, make it more reliable to bring stuff back and more safe and more, easily repeatable, bring our product, services, and people back from space.
Yeah, well, I mean, many of the potential markets. I was seeing some commentary on some of the pharmaceutical manufacturing, semiconductor manufacturing. That down mass is critical to make those markets.
And there's still regulatory barriers.
Yeah,
so we just have to, we have to really look at reducing those at this point.
Regulatory barriers and regulatory confusion.
A lot of that.
A lot of different agencies trying to figure out how do they work together. You may have followed the Varda example, whatever that was a year or two ago, where they had the satellite in orbit. You get the FAA and the range managers and all to agree on the permissions to bring it back.
Hi, Veronica.
Hi, Veronica. I want to circle back really quickly. I had something when you talk about bankruptcy. Usually, on terrestrial businesses, they go bankrupt. The senior investors usually have the preferred shares, and they end up getting the assets. And what they do in 98% of the cases is just, sell off the assets piece by piece so they can claw back a little bit of their original investment. What happens with a space asset like that? It's not going to be that easy, I would think, especially if it's a commercial space station or an AI thing that's they just couldn't make a go of it, but it's still hardware that's sitting up there.
Yep.
And so what happens in that case? It's not so easy.
Which is exactly why you don't have those insurance and credit markets really formed at all in the space sector yet.
Yeah.
That's the sort of thing is like, when a guy goes bankrupt, you got to have some residual value for the credit markets to be able to price appropriately.
That's why a lot of guys I know ended up using a captive.
Yeah.
They got away with some of it by bringing in a captive.
Oh, yep. Bringing assets captive.
Yeah.
Yep. Which is why barter returns to Australia.
Australia, yeah, exactly. I thought. So basically, what we need is a repo man or woman for space. That's what you're telling me.
Well, that same guy driving that car. Yeah, that's it.
I'm going to take that satellite back, buddy.
Yeah, Tracy Walter up there driving that car.
Repo
man's life always intense.
Modularity, so you can take advantage of the all the cost that was used to put up a solar panel and replace out the electronics to have a new system. All sorts of things need to start to come into play here to make this work.
Yeah.
That would be a great follow-on, though, because that movie that came out of China or someplace, or maybe Taiwan a few years ago, called Space Sweepers. It was actually quite funny and quite popular. They made some money, and maybe the follow-on would be Space Repo Men or something. That's what we need to see now.
Yeah.